Yo, hello. Yo, hello. All right. Okay, I think we should be live on YouTube. Oh shit. Hello, hello. Are we live? I want to make sure we're live. Hello, hello. What's up, Morteza? Give me a second, buddy. I'm gonna make you co-host. I have sent you the invite. All right.
Can you hear me?
Yes, I can hear you. What's up, D11N? What's up, Brody?
I don't believe we can hear him unless he's
Yeah.
on the.
No.
Okay, can you hear me though?
Yeah, I can hear you.
Okay, let me see if I can add the YouTube.
Link. Yeah, I'm trying to get it as well.
Okay, so go ahead and see if you can pin it.
Yeah, I keep saying. Trying to get the link. I don't know why it's not. Hold on.
Oh, there you go. I can see you.
Oh yeah.
And
I don't know why I can't get the link for some reason.
let me do this.
Yeah.
Let me see. Give me one sec.
I'm on my phone, but it's not letting me see myself or anything.
Oh,
Oh, wait. We have a couple of listeners. Welcome, guys, to the space. With Real Open Army. We're doing this space to react to the earnings that are about to happen in 30 minutes. I'm also live on YouTube. So we're trying to get the link for the live right here in the comments any second now. The reason I'm not doing a live here on X is because it adds like 45 to like a minute delay. So I'm not able to really talk to you guys or anything like that. So yeah, if you guys want to see the screen or whatever I'm looking at, it's gonna be on YouTube. Right here is just
I
gonna be
just
the audio. Yeah.
I just sent a link in comment section. Let me see if I. Oh,
The reason
see if
I'm
you can pin it because I can't.
yeah, let me see. Uh, Enable post, add, and follow mute.
Well, actually, no. There you go. Add. Uh, okay. Highlights. Okay, go ahead. You do it. I don't know if.
Yeah, let me try.
But it's in the
Yeah, it's in the comments. I'm sure they're gonna
comments.
open the comment and go look at it, so it should be fine. I'm not doing a live here on X. It's
Okay, go ahead.
all right. Yeah, it's fine. We're fine.
Just let's do this. We have time.
Mm-hmm.
Go on the comment section.
Mm-hmm. I click the three
Uh,
dots, but it doesn't show me any kind
yeah,
of pin. No, it doesn't.
that's interesting.
Yeah, it's
Let's see.
okay. It's okay.
You post. Uh, Okay, so just setting. If you go to the space,
Mm-hmm.
there's like three dots,
Okay.
leave. You see that?
Yeah, three dots on the top right. Space settings, microphone settings, show captions. That's all I have.
Oh, okay.
It's okay. I'm sure
Let me,
that
yeah, you move on. I might be able to figure it out.
yeah, I'll just repeat here and there.
Yeah.
So yeah, guys, the space. Obviously, I can show my screen here on the space, but I'm live on YouTube. The link is in the comments of the space. So you guys are welcome. If you guys want to see my screen, you guys are welcome to come see here. So yeah, it's 11 more minutes to the earnings drop, and then earnings call is at 2 p.m. 5 p.m. Eastern time. How you feeling today, Real Open Army? How you think we're gonna do today?
You want my honest answer?
Yes.
I don't care.
Yeah, that's right. I don't care
Yeah,
either, honestly. If we drop, that's fine with me. You know, if we, I don't know, $3, whatever, I'll just buy more.
that's fine.
Yeah, I'm for the long term. A lot of people is like, oh no, we're gonna drop to $3, blah blah blah,
I really hope this stays at this level for
for
long.
longer. Yeah, so we can load more. You know,
Yeah.
I've been paying off debt, and I've been getting in options. You know, trying to like gather, raise money and buy more shares. But I've been buying like almost everything right here. I've been buying all the time on the way up, on the sideways, on the down. Today I bought around 254 more shares of Open actually.
Yeah.
So yeah. All right, guys. For the technicals, if you guys want to see the chart really quick, not a lot it's happening. If you guys see my post on X, you guys see that we have this descending channel. We're at the bottom of the descending channel, and we also have this downtrend. On the downtrend has been broken as of yesterday, and today is holding right above it. This setup is really nice in my opinion going into earnings, but it doesn't really matter the indicators or anything like that because the earnings can be amazing and we completely tank, or they can be really bad and then we completely pump. But it is a good setup if we are going to pump from here, if the earnings are decent, they're good, or if the guidance call is solid. So let's just wait and see what Cass has planned for us, you know? We can see the RSI divergence made a double bottom. It's now moving with the price. As we can see, price right here was making lower lows on the candle on the daily, while the RSI was making a double bottom and going sideways. So the RSI has now broken out of this bullish divergence, double bottom, as well as the price has now followed. One thing that someone actually mentioned, but I'm gonna pull this for you guys. You guys know I'm live on YouTube. The link is in the comments if you guys want to see my screen. One good indicator that we have is the MACD on the daily. It is about or is flipping to green. It's about to flip green as we can see here. This is a good indicator. When the MACD flips green, then it's a good signal that we can get a reversal or a push higher. You know, the bigger the green bars are on the histogram, the bigger the moves can be. For the past in this downtrend, we can see that the MACD has been red and is now flipping green with this potential reversal. So yeah, it's also another good indicator that we have on the MACD. Volume still really low. How much volume do we have today? Let me check. We are at around 43 million, so it is really low. I believe with earnings, the volume is gonna get here, and then that's the real decider, you know.
I just found how we can pin it.
Yeah.
As you see, I pinned the link to the YouTube
Mm-hmm.
for open door call,
Mm-hmm.
but I think you can only pin your own posts. Let me see if I can do yours.
Yeah.
Let
Yeah.
me see.
It's really confusing. It's the first time that I do this. Oh, welcome CRCO languages, Call City, Rent Deep, Site.
Oh,
Yo.
there you go. Done.
Okay.
So if you see the first one
Mm-hmm.
is the
Oh
YouTube
yeah, yeah,
link. Yeah.
yeah. All right, sounds good. We have 3 viewers on on YouTube right now. That's fine. Okay.
Honestly, if I just want to watch the call.
Yeah,
If
yeah, me
if
too.
anyone wants to join us, cool.
Yeah,
If that's only me and you, cool
yep.
too.
Mm-hmm.
If they have anything to say, they can raise their hands on X to come up and talk. If not, that's cool too.
Yeah.
Yeah.
We're just doing this for
Once,
fun, nothing crazy, nothing super professional. So
yeah.
yeah, don't worry, guys. We're here to chill, good vibes. I want to talk
Last
to you
time,
guys.
last time I actually created
The
a
space.
scheduled one. Then I don't know what it was, but so much difficulty, disconnected like 1,000 times. Then I just gave up. Uh,
Yeah, I remember it was like four
then
times.
it was, I think it was Robert that he had started a live YouTube. Then I joined his live.
Yeah. You guys like my
Oh,
hat? The open door hat?
oh, I haven't even noticed.
I'm rocking it right now.
Oh, that's cool.
Yeah. Before the stream, I actually went to Starbucks, but the line was so long. I got there like 25 minutes before the stream. So if I would have stayed there, I'll probably still be there right now. So no, I just had to give up my Starbucks. I was gonna get a
Yeah.
white chocolate mocha, and I was
Oh, you
gonna
were you were at the Starbucks.
yeah, and I was gonna pour the coffee into the open door mug that I have to be
Oh,
drinking over here.
yeah.
Yeah. All right. So price is being right now at $4.70.
Somebody was asking about like calls, what calls. I actually stopped playing calls at earnings.
Mm.
Yeah.
Yeah, it's not really worth it. Playing calls, it is honestly like a 50-50. And besides that, sometimes the call may go or the call or the put may go in your favor, but then you get burned because price goes up and down and it stays at the same. Like Carvana yesterday had earnings. It dropped. I'm gonna pull it out right here on the stream if you guys are watching. Carvana yesterday, it closed around $364. After hours with earnings, it dropped all the way to $272 around there. People were celebrating, people was screaming, oh, puts printing, blah blah blah. Into the pre-market, Carvana was back above $342.
Wow.
So when
Oof.
when yeah, crazy recovery. So when it opened, puts and calls were both losing money, so they
Yeah.
got burned.
Yeah. No.
Yeah, I actually got a really nice entry today on Carvana. I made 710 bucks. I showed it right here on top. I got a 330 put, and I saw like right here. So yeah, was
And
good.
bought open.
Yeah, and then I bought open. I bought 254 shares with of open. So yeah,
That's cool.
yep,
Last time I remember, open dropped like almost 20%. Then
yeah.
it,
Then we recovered with the guidance.
yeah, almost erased all the loss the day after.
I feel like we're still gonna be negatives like EPS and I don't think revenue, but EPS for sure we're gonna be still in the negatives, but it is gonna be a better negative if it makes sense. I don't know
Hmm.
how much are we expecting. 12 cents a share. I have a feeling that we're gonna come like 8 cents a share, 9 cents a share. So that would be really good. And the revenue, I'm sure we're beating the revenue. I'm not exactly 100% sure how much we are, but I think we did like 700 million, something like that. We've been beating the revenue for the past few weeks, months, as same as the last quarter, if I'm not mistaken. And then with Cass guidance, I honestly believe that he has good things under his sleeve. Like he has something good. He got
I I I mean the end of this year is the earliest I wait for Open Door to be uh anything close to being profitable.
yeah,
But all I care about today
hmm
is what Cass says on the
yeah,
call.
yeah. True, true. Thank you for the people that follow me on X. I appreciate you guys. Thank you,
Yeah,
thank
I
you.
just saw your followers. It's over 800 now.
Yeah, I'm at 839. Not
Yeah.
bad.
That's cool.
Yeah, I started like in November, and I mean, I don't think it's bad at all. You know, I've been
No,
averaging like 200 a month, so pretty good, pretty
that's
good.
good.
Bro, there's a guy on X that used to talk shit on everybody. His name is Jeremy Boseman. Oh my gosh.
I only know George Noble.
Oh yes, and George Noble. Oh my gosh. That
Who's
people.
that? Jeremy who?
Jeremy, it's some guy that I don't wanna be.
Is is
Uh,
that a Tesla guy?
no, it's a guy that always posts a photo of this the clown. He always be posting a gif of a clown on
What's the
everyone's
name?
comments.
Jeremy?
Boseman or something like that. Yeah, but anyways, who cares? You know. All right, we have earnings drop in 2 seconds. Markets closing, open close at $4.65. So let's see.
Okay, I'm going to their website now.
Yep. All right, we should see a big candle any second. Don't get too scared. Guidance is what matters, in my opinion. All right, guys. Fingers crossed. Let's go. Quick reminder, I'm live on YouTube if you guys want to see my screen.
The link is pinned at the top
Yep.
or in the comment sections.
There's just people watching. Thank you guys for supporting.
That's interesting.
Okay. Okay, little drop. Let me pull out my phone. I think I can see things better on the phone. I used to use Trading View for the charting, but I do everything on my phone. Ah, it's really cool. These are the worst moments while you're waiting for the candle.
Not really. For me, I told you, I don't care.
Yeah. I mean, I don't care either, but it's just fun to see, you know?
I
It's
love this
excitement.
feeling. Like
Yeah.
if you feel like if you are in it for a long term, the longer it stays here, the happier you are.
Oh, yeah. Yeah. I just like to be excited, you know? I get excited for these things. It's called passion.
Yep.
All right, guys, where do we think we see the candle? Plus to $3, pump to $60. Let's see, let's see. All right, starting to get some action.
Where is this? I'm surprised that they don't have the
It always
earning results on their website yet.
it always
It's
it always takes a bit, I believe. Let's see if volume is pouring in. Okay, we still have really low volume, 200K volume after hours.
if you the guys are on X, feel free if you want to jump in the stage and say something.
Yeah. You just know we're keeping it chill, you know, nothing professional, nothing crazy. We're just here for good vibes and you know, just to talk. You guys are welcome to request to speak. Ten people watching the live stream. Thank you guys. Appreciate you. It usually takes a few minutes. I remember once when I was in Carbani, it took like 10 minutes and I was biting my nails. No, but I had a lot of
That
calls.
that was yesterday.
No, 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 no. I didn't play earnings.
Oh, let me. Somebody's asking for a link on WhatsApp. Let me see.
Okay,
Let me check that out.
yeah, please. For some reason I can't open my own live on YouTube. For some reason. Right? The results haven't dropped. Still waiting. I'm checking Webull to check out. Batman, what's up, brother? You're always supporting me. I appreciate you a lot. What's up, Elias? You too, man. Appreciate you guys. See you guys here on the space. Oh my gosh, it is so cold. Still really low volume.
You guys,
Okay. Oh, okay.
AG, I
Here it
saw
goes.
your
Here it goes, baby. Okay, $5. Oh, $5.08. Okay, okay. Let's see. Let me
your
open Weibo. Okay, it's happening now. Let me see.
five
Open.
dollars.
Yeah, news.
Holy shit, 10%.
Yeah, nice. Let's go. Let's go. Let's go.
Okay.
Let's not get too excited. This can calm down. So you,
Just to make sure, AG, if you can hear me, I believe you already found it, but just in case you haven't, the link for the YouTube is in the comment section and also the one of the pinned messages at the top.
usually the first move is the wrong move, but it doesn't look like it. Okay, volume is coming in. We're almost at 1 million volume after hours.
1 million. Oh,
Yeah,
1
almost.
million.
Yeah, 1
I,
million.
okay. I remember 1 billion volume.
Yeah,
Remember?
that was crazy. We peaked to a high of $5.21. We're currently at $4.84. Oof, I miss this Titan, man. Come on, Open Army. Come on, future. We're future millionaires. We're pre-millionaires here.
I have no doubt.
Yeah,
No
patience,
doubt.
patience. The Carvana, I mean, Open reminds me so much of Carvana. Back then, a 20-cent move, 30-cent move, a dollar move was crazy. Volume above 1 million was insane. Nobody believed it. Nobody believed in Carvana. They used to call it a meme stock. And look at it, you know?
Yep.
And I believe Open is going to be bigger than Carvana. Bigger than Carvana. All right, so far we've been having a positive reaction to the earnings. But let me see if I can get. I don't see anything yet.
On their website?
No, I get them on Weibo. I'm refreshing the news because they usually drop them on Weibo, but I don't see it.
I'm checking their website.
We're up 8%.
Still not there.
Nope.
I'm surprised if the reports is not out there. Why the stock is moving up?
You know the market makers get the. They already
Oh, the
know.
news
Yeah,
faster?
yeah, yeah. Oh yeah.
Mm. Ooh, I thought
No wonder you wonder why sometimes before like news are about to happen, you see like, oh, there's so much volume on, I don't know, 300 puts, 300 calls, for example, and then I don't know, hours later, boom, the market or the stock drops or pumps, and then the people that put those orders make millions of dollars, because they already know. We're little fishes.
people in WhatsApp should join X. I don't know why.
Yeah, it's okay. All right, we're at $5.11. So far, this is a really good sign.
Let me share the X
Yeah, let me share.
link.
Yeah, let me share both.
Stupid link.
All
There
right,
you go.
we're up 11%. All the people in the comments on Weibo, pure garbage.
Yeah.
People are so dumb. I don't like to be toxic. I'm not toxic with anybody. If you don't know, I'm not gonna criticize you because I once was there. Oh, I think they dropped the thing. They dropped the report. Oh, let me open it. Let me open it.
I don't see it.
I just got that Weibo notification. Hold on. Okay. Well, I got the following: Open Door quarter four loss 1.1 billion. Ooh, that's what I got.
Let me see.
We are up
Oh,
14%.
13%, 14%.
Yeah, 14%, baby. Let's go.
Wow. Is that one of those days? 30%, 40%?
Imagine 100%. That'd be nice with the guidance
Wow.
call.
I have
That'd be pretty nice.
100%.
Hey, if you guys are watching my live stream, look, I'm gonna pull out a post really quick.
My son was he's crazy about Pokemon
Oh yeah.
cards now. And yesterday I told him, don't ask me what, but if anything good happened tomorrow, I'll buy you 2 pack.
Oh, let's go. Double your dad.
I have to buy now.
You have to buy him 3, matter of fact.
Let's see. If it passes like 40%, 50%, sure, I'll buy him a
I don't know.
full 6 pack.
I have a good feeling with Touch 7. That's just me.
7.
You never know. Watch. If you guys are watching my stream, I made this post I think yesterday, and I be making. Well, let me go a little bit more to the back, more back. Yeah. Let's see. I actually made a video right here, but let's see. All right, February 17, I think Monday or Tuesday, whenever. I made this post and I told you guys the following: that Open had a really crazy setup going into earnings, as we can see here on the daily. That we still had this descending channel and a downtrend. We eventually broke out this downtrend on the daily, and if earnings surprise like earnings calls, the earnings and the guidance was solid, then probably tomorrow or the coming weeks we can get a really nice push to the upper trend line of this descending channel that sits around actually $6. So if tomorrow we open at $6 and we push with with the results, whatever, we can finally break this descending channel that been forming for like 5 months already. So far after hours with earnings, it is looking good. Obviously, this downtrend was broken. We bounced right at the right at the bottom of the bottom trend line, and then we have broken out. Right now, we're sitting at $5.17. So pretty good. Bear reaction. The last earnings. Last earnings we did from $6 and something all the way to $4.80, and then eventually we came back up. But so far so good.
I don't see any documentation.
I just got a notification from Weibo that says the following.
Maybe they released it right at 2. I
Yeah.
don't know.
No, they usually take a little bit of time. But I got a notification from Weibo that says the following: Open Door Technology Q4 lost 1.1 billion. That's what I got from Weibo.
Mm.
It doesn't show nothing on the if they beat, or it doesn't show nothing yet, so. OPEX, which is the ETF of Open, is up 21%. Pretty nice, pretty nice. Hopefully Open catches up right there. Oh, I'm sorry, look, guys. I'm not toxic, but I cannot wait to shit talk people. That haters, the people, bro. I have like
You-
3 people that every day when I post
You-
something, they go on a rampage, bro.
You
Like,
know, as much as I love to do this, but you know what would be more hurtful to them? Like,
ignoring them.
just don't say anything.
Yeah,
Ignore them.
yeah. I know, but there's just 3 people that like, I'm not toxic, If you don't know, I once didn't know church. I'm not calling myself an expert, but I do know a little bit more now.
Yeah.
But like, if you don't know, I'm not gonna criticize you. I'm gonna try to help you. Like, if you guys already know, whoever asks me a question, I always gonna answer you like the best way that I can. I try to explain you whatever. I'm never gonna give financial advice. I'm never gonna tell you to buy or sell. I'm just gonna give you my opinion on whatever. But there's people that they don't even back themselves. They just like to talk shit. That's all they do.
Yeah.
I tell you, I have like 2 people that they have months every post like putting something. Like I don't let it get to me. It's just funny to me. But anyways, guys, open it is up all the way at $5.19, which is 10% up. All right, I got the news.
There's a message in the chat,
Okay,
like WhatsApp.
yeah.
Bloomberg send it out. I don't have access to that.
But I'm reading. I think we will just drop them. Okay, let me see. Just a little confusing.
I wonder if anyone can request to come up, or is it because the way you set up the space?
No, I think they should be able to request it. I didn't do anything in specific. But I am getting this from Open Door Technologies, Q4 revenue 736 million. So I'm pretty sure we beat by like 200 million in revenue. Because I think the expectation was like around 530 something million, no?
Yeah, revenue. This is what I see on Bloomberg, 736 million, and the estimate was almost 595 million.
So we beat revenue.
Loss per share, 1.26 versus, I can't see this. Yeah, I can't. Let's, I would wait for
Yeah.
open the document.
Well, I do see this post from Sherwood News. Open Door Technologies jumps after posting better than expected Q4 results. So we beat expectations basically. The earnings per share are still in the negatives, but it is improving.
Can someone in the, oh, there you go. Someone requested. Let's see.
All right. I'm approve you. Let's go.
I did.
I think it should be able to talk now. Whoever requested.
Go ahead, Randy.
Hi guys.
What's up, brother? Welcome.
Hi, thank you. Thanks. I just I saw your post and I thought I'd listen in.
Yeah, sounds good.
Yeah, man. It's
Wait.
looking good, man. It's
Yeah,
looking good.
It's looking good. It's better than last time. Last time with earnings, we dropped and then we eventually came back. But right now, we're getting a move up, so that's nice.
Like I joked yesterday, we can handle some good news.
Yeah.
Yeah. 7 cents loss, EPS 7 cents, 0.7.
Okay.
Okay. And the expectation was 21 cents?
I think wasn't
10
it
or 11. 10 or 11 cents was
Yeah.
Okay,
It
see,
was around
see,
11.
see, like I told you guys, I was expecting like 12, the expectation, 12, losing 12 cents per share, but I did say like I had a feeling like, I don't know, 8 around there. So
That's
7.
pretty good.
That's
Like
pretty good.
the expectation was almost 11 cents, and what was that? 7?
7.
7 cents, yeah.
Yeah, that's
It's
pretty
on
good.
Pretty
the
good.
investor.opendoor.com website. They've released the document.
Oh, okay.
Oh, they did?
Can you send me the link by any chance? Or
I'll
if you
do
can,
that.
yeah, so I can open it right here on my screen so we can all watch it.
Yes, if you go to Kaz's page, it's his last post on there.
Okay, I'll go check it out. All right, let me open my X right here.
Oh, on X?
Yeah, on X.
Okay.
I hope you guys are liking the space and the YouTube live. It's the first time that I do this personally, so I'm trying my best to keep it professional, keep it good, keep it entertaining.
It's cool. We're enjoying.
Yeah.
No, it's really good.
Because I used to...
There's another YouTuber called Trend Spider.
Oh yeah.
Trend Spider. His one's quite good as well. He has all of the he had AI analyze the document.
Yeah.
And
we're still waiting for forward guidance on that. So I'm watching like 2 or 3 at the
Oh,
same
there you
time.
go. Supporting material, Q4 2025 open house. There you go. Q4.
So by the way this looks, so today the expectations I think was losing 12 cents per share, and we came at 7. So next quarter, if they keep this progress, we can be next quarter like at only losing 3 cents per share, and by the third quarter, maybe profitable. Like Kaz been saying. So my opinion looks good. We are now trading at $5.36. We are up 15%.
Yeah.
Nice. Congratulations, guys. To whoever made it this far, congratulations. I know,
Yeah, man.
I
I'm
know,
glad I
yeah.
topped up.
I know it may be painful for some of you guys that, I mean, I don't want to say it like this, but chase around $7, $8, $9, $10, you know. Um, but it's a good company. For example, sorry to the BYND lovers, Beyond Meat, but that's a meme stock, in my opinion. I'm not saying they're
Yes.
not able to switch their business, or I'm not saying that, because opportunities and turnaround stories, there's always gonna be some, But that's a meme stock. It pumped from how many cents? 80 cents to $8, and look, it's back up, back below $8. And open, from 51 cents to a high of $10.87. We pulled back for the past 5 months all the way to $4.20. So, it is a big move down, but we didn't go below a buck. So pretty good.
Yeah, no,
Baby
it's very
steps.
good.
Yeah, baby steps. You know. I once was holding Carvana. I had 3,000 shares at $13.40, and it went down to $6. I was down like $22,000 for half a year, and then I eventually, my conviction led me to hold, and I made good money. So, but that's if you believe in the company, If you believe it's gonna do good,
Yeah, exactly.
I'm putting
I
a
think
link.
the macro environment is changing. Like mortgage, the average mortgage rate was like 6.01, the lowest it's been for like 4 or 5 years. That was
Yeah,
released today,
yeah.
so that's good.
Also, keep in mind they have a Open Door and Leonard Corporation. They have a partnership. Imagine
Yeah,
if Leonard decides to be like, okay, we're gonna build the houses and we want to sell them directly through Open Door. That'll be huge as well.
yeah, that's what will happen. So like they've said that Open Door is going to be the platform for people to buy and sell off of.
Yep.
So
So
yeah, man, if
it's
they
like
execute, this is going to go much higher.
it's innovating. So I'm gonna tell you guys this quick story. One of my uncles, he buy a house uh last year. And I remember, my family will be like, oh, your uncle is gonna go look at houses, blah 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 blah. Well, he finally found the house that he liked. It took him like 4 months to get approved, to wait for answers. And then once he got approved, he got the house a month later. So that's like half a year looking for a house and getting the house. While he was paying a realtor, paying the fees and everything, that is terrible. No one wants to do that. I mean, maybe, other people, or, but eventually I feel like this is going to become more, how you say, more often, like people's going to start looking at, oh, maybe this does work. Maybe it is easier.
Yeah.
Same thing with Carvana. Nobody wants to go to a dealership for hours and deal with a salesman.
Yes,
Uh,
it's definitely interesting. You just have
yeah,
to. I think I like. I was thinking I'll give it like 12 to 18 months,
yeah, definitely.
and
Oh,
should be like at least 100% up by then.
mhm, yeah. Randy,
If not sooner. If
Randy.
not sooner, I mean, when the market opens tomorrow,
Mm,
it could go up another 20%.
yep. I do believe with guidance, we're probably gonna go hit $6 and above. That's just my opinion, guys.
Yeah, the
Uh,
forward guidance that hasn't come yet, has it?
yep. That's what really matters.
I
Yeah.
like your opinion.
Uh,
Yeah.
Randy.
Plus, they reduced the average time that the property is held is
Yeah,
reduced by like 23% or something.
that's pretty good.
It's under 30 days now, right?
I'm not sure. I just saw the percentage number. I
Yeah.
didn't.
I think I saw the number under 30 days.
Okay, that's brilliant.
All right, I'm looking right here at one of the news in Weibo. Says that following earnings, Open Door Technologies beat estimate earnings by 30%, reporting an EPS, as we know already, of a loss of 7 cents versus an estimate of 10 cents. So that's good progress in my opinion.
Yeah.
Very good. Randy, can I ask you something really quick?
Yeah, sure.
If you don't think you think you could mute your mic when you don't speak because we can hear like the background, like the TV, you know?
Yeah, sure.
Yeah.
This is the first time I'm actually joining a call on X, so
Oh,
I
really?
didn't actually.
Oh no,
Yeah,
you're
yeah,
you're good. You know, I'm not telling you like in a bad way, but you know, you so we don't keep distractions away.
yeah. No, that's good. I figured it out now.
Yeah, thank you, appreciate it, man. All right, let me check the volume. Last time with the news of Cass joining becoming the CEO, I think we hit like 100 million volume after hours, which that was insane. Right now we're sitting at 6 million volume, so it is pretty good. That is a good amount. I feel like more volume is gonna definitely come in with the guidance call.
I can't wait for the call.
Yeah. I'm so excited, bro, like a little kid.
Yeah.
Cass just posted the following: "See you all very soon," and he has a shirt building faster.
Did you see the sword that he
Yeah,
was?
yeah, I saw it. Bro, I'm shaking on the live stream. I don't know if people can see me shaking, cause it is so cold, man. What's up, Onando? What's up, Manito? Welcome to the stream. Fernando's here, real open. He's watching us or listening to us.
George Noble blocked me. Otherwise, I would have invited him
Oh, he blocked me
to join.
too. He blocked me.
He did?
Yeah, he blocked me.
What
Like,
did you do?
I did talk. I did call him out, bro. That was like 2, 3 months ago. That was, I think, the time that he was fighting with Eric Jackson
Yeah.
in a space. He was just shit talking Eric like nonstop. That was when Eric got heated. That was pretty funny.
It, I don't know him personally,
Hmm.
but I don't like I can't I can't imagine how much negativity a person can have.
Yeah, the only thing that that it doesn't make sense to me. I think he says he claims to have 37 or 47 years of experience.
42.
42. Oh, 42. That's twice my lifespan almost. But he claims to have that many years of experience, but you're not able to take criticism from someone else if they go slightly the other way from your opinion. He just blocks
Yeah.
you. He just gets mad at you.
Yeah.
But whatever, it's gonna be so funny when Open becomes profitable, when we are much higher. Then he's gonna come with an excuse now. Oh, Open Door is overvalued. No,
Yeah.
it's not a meme stock no more. It's overvalued, guys. Now.
Yeah.
Well, so far so good, guys. Good candle, good push. We didn't get a dump of like how much percent last time? I don't remember exactly how much we dumped last time. Let me see if I can go.
20% almost.
Yeah. Yeah, if you guys follow me on X and been checking my posts for the past days, you guys can see that I told you guys about this descending channel that we've been tracking for the past 5 months. And we had this downtrend on the daily, which we broke out yesterday, and today we were holding above it. And I did tell you guys that this setup was looking really good going into earnings. And if we broke to the upside, and if earnings were good, if guidance call was solid, then we can start making our way back up to the breakout around $6, which that's the breakout out of this descending channel. So far so good.
Randy, do you remember which AI tool the person you were talking about on the YouTube channel was using?
Me?
No, Randeep said there is another
Oh,
YouTube
Oh
channel.
yeah. Yes. The channel's called Trend Spider. Trend Spider.
oh yeah, that's like the one from X, Transpider. Yeah, I think he developed his
Yeah.
own AI too.
Oh, okay.
Trend
Oh, no,
Spider.
he's got like this little
Oh, he's
logo.
actually live.
Yeah, yeah. He's got something on there called Sidekick. I don't know if that's the name of the AI thing.
No, I don't know. Is he live with Open as well?
Yeah, yeah.
Oh, that's pretty cool. Oh,
He's
he's
doing
taking
all of
my
the
viewers away. No. I'm playing. I'm playing. I'm playing.
I'm watching
Oh
three,
my
man.
god.
I'm watching
But
one on my laptop, one on the
oh,
TV, and one on the phone.
yeah. Hey, but he's live on X, right? With the screen showing his
He
screen.
he
Oh,
is
okay.
live. I
Okay.
see him live.
Yeah.
On
Yeah.
YouTube.
Oh,
Um,
okay. Okay. I
let me
will go
s-
live. I would like to go live on X, so I don't have to do it on YouTube, so
well,
you guys can
actually,
see.
he's covering open.
Yeah, that's crazy. Like I was saying, I would like to go live on X so you guys can see my screen and everything that I'm looking at, and you guys don't have to go to YouTube. But the problem is that the problem is that X has like a 40 to like a minute delay. So if you guys go and talk to me, it's gonna be super delayed. It doesn't make the experience fun. I like to talk with you guys. If you guys comment or anything, I like to interact with my people. Hopefully one day they bring it to no delay. But so far, we broke above the $5.09 resistance. As we can see for the past weeks, days, that was a pretty strong resistance. We are also now in my chart. This is completely different from someone else. If you guys are watching my stream, open this move for the past few months kind of makes more sense. Why do I mean by this, guys? If we can see here on the chart that I have displayed, we have demand zone between $4.21 to $5.04. Usually, when price arrives to a demand zone, it gets sell off, it gets pushed down. Oh no, sorry, a supply zone. So as we can see here, back in 2022, we were trading in this range on this supply zone, and then we came down. We did another attempt back then in 2023 on July, I believe, and then we rejected out of the supply zone. We try again on January 2024, and then we rejected. It was into last year on September that we finally broke the supply zone. And now looking at this pullback that we've been doing for the past 5 months, it now makes more sense. Why do I mean by this? Prior supply can now be flipping into a demand. As we can see now, obviously, with earnings, right now we're sitting at $5.20, which we are out of the demand zone, which this can be a nice bounce. So this is hypothetically. So now we can probably do something like this, if you guys are looking at my chart. We come down after we broke out. It took us 6 months to come back to this demand zone, potentially flipping to a supply zone now, and then from here we're ready to take off again, to make another leg higher. And it makes sense. We've seen bigger institutions buying, like Lennar acquiring 18 million shares, Bank of America almost 2 million. I think JP Morgan, I don't know, or Goldman, man, I don't know exactly who. They increased all the way to like 50 million. So it makes sense. All right, we got 27 more minutes into the guidance call. I'm probably gonna mute myself, and I'm probably just gonna go on YouTube and pull it out for you guys here on the screen so we can watch it.
That sounds good.
We have a lot of people listening. So guys, I appreciate the support. Thank you for listening, taking the time. If you guys hear snoring on my back, I'm sorry. I apologize. I have a Frenchie,
That's your dog.
and he snores pretty loud. He's sleeping right now. He is upside down with his belly and everything. He looks so
Yeah.
funny. If you guys ever wonder, for the people that follow me, and you guys have seen my X banner on my profile, and you guys see that dog on my banner, that's my puppy. I edited it with my designer and everything. So yeah, he's snoring pretty loud in the background. I'm gonna take a look at other stocks in the meantime while the earnings call is here. So I was tracking Hood. It's funny that you say that we're here Real Open Army, because I had told you about about Hood, Robinhood.
Yep.
Robinhood, if you guys are watching my stream, it had it in head and shoulders, the left shoulder, the head, the right shoulder. I did to Real Open Army that if we broke below $106, the net support was at 102. And then if we broke below that, we're likely to come down all the way to a range of $70, which we touch. Because this back then was like a supply zone, as we can see here, and it never really came back down to test this area. And now, after almost a year, it has come down and it's testing now that supply zone, potentially flipping it to a demand zone. And from here, it is likely that hood, if it's able to hold here, to reverse from here. So yeah, these play out really nice. Let's see what other things. Netflix. I think I sent it to Elias. Netflix has been pulling back a lot, honestly. Let's see what else I have. Meta. I remember I lost a few dollars with Meta back then because it had like a nice cupping handle, but it didn't broke it. Let's see. Tesla. I haven't really paid attention to Tesla lately. Haven't really tried anything. I did make good money right here. I don't know if you guys remember that post that I posted the Tesla play. I got in right here at 467 with 50 cents call. I think cost me like $600, and I sold it right here for like 2,600. So a 300%. Palantir. Palantir also with another head and shoulders. Left shoulder, the head, right shoulder. I mean, I'm sure everyone already knows that. We've seen this chart a lot on X. And it's now to this supply zone, potentially flipping to a demand zone, which sits between $100.20 all the way to $100.33. So Palantir can now come. I mean, it's already in this range and just can go sideways into it switches, or it chooses a direction, either bounce, reversal, or it keeps going lower. But anyways, let's go back to Open. Let's see how it's going with Open. All right, we're sitting at $5.23. We are up. We are up 12%. It's almost guidance. We have 23 more minutes to go. Mihaly, what's up, brother? That's a good guy, Mihaly. He's listening to the space right now. He's a friend from Weeble Fit. Me and Ken were always arguing and fighting against the shorts. I'm sorry if I pronounce you guys' names really bad. My pronunciation, my accent is really bad, especially with names. But have me patience, please. Matias, Chuck, Atsu, Was, Mamba, Atsushi, welcome guys. Thank you guys for listening. Oh, my bad, guys. I forgot to watch the YouTube chat. What's up, MBO Creep? Yo, what's up, man? Onando, yeah, let's go. Thank you, bro. Appreciate it. Achilles, ready. What's up, brother? All right, Cass just posted the following. Cass posted the following. Live stream for Q4 financial open house starts in 20 minutes. Join early, 15 minutes early if you can. We're going to have a little bit of fun. Fun is good for business. Ooh, you guys heard that? Are they gonna do it like a little game, little jokes, or what?
Just a new series of warrants.
Yeah, so let's join like in 7 minutes. All right, Open is going up again. Open like that tweet from Cass, baby. You're now sitting at $5.40. We are up almost 16%. I wish I could turn the camera to my dog because he looks so funny sleeping right now. But he's gonna mess up my whole setup, so no. Anyways, I'll be back. I'm gonna turn off the camera really quick. I'm gonna go use the restroom, guys, and I'll be back. Okay? Take
All right.
over. Take over. Real Open Army. Let's go, baby. All right, guys, I'm back. Nope. AG, same here. Don't care about price action this early. Net quarter is more important. Yes, sir. Definitely it is. MBO crypto. How do you analyze stocks? How do you analyze stocks? Give a run through. Why do you mean? Can you elaborate a little bit more, please? I didn't really catch that.
You want to join the
Yeah.
call in 2 minutes?
Yes. Is he in YouTube or no? Let me check.
Yeah,
Okay.
it's the same. If you go to the
Yeah, I have it right here.
all right.
Upcoming in. It doesn't make sense though, because he said 15 minutes before, and right here it is 16 minutes
Yeah, 50 minutes before 2,
on the website.
which is no. In his comment says join
Yeah.
15 minutes before.
Yeah, it's about to be the 15 minutes. Let me go search it up. Let's see what fun thing they're gonna do. Because he said the following. Let me pull it out for you guys. Live stream for Q4 financial open house starts in 20 minutes. Join early, 15 minutes. Join early, 15 minutes early if you can. We're going to have a little bit fun Fun is good for business. Come join us at blah blah blah. So we're gonna open the link. All right, let's see. And what are we supposed to? I'm on the website, but I don't know. Exactly. Price is sitting at $5.31.
Did you find the link?
For the website?
The YouTube.
Yeah, I have the link for the YouTube, but
Okay.
the YouTube says ready in 15 minutes.
Yeah, we'll see.
I'm out on the website because he said to join the website. Let's see. Let me know what you guys believe. What you guys think in the comments, guys. I'll read you guys on YouTube, or you guys can comment right here under this post, under the space, and yeah. Or you guys can also request to talk. You guys are welcome. Okay, so MBO Crypto says the following on YouTube. Like when you look at stocks first time, what do you do? Like a fresh stock to predict the price. All right, so first of all, what I like to do, I like to identify support and resistance levels. You know, so when price, for example, like I don't like, let's see, like right here, if you're watching the live stream, open for the past few days, it had a really strong resistance at the $5.09. As we can see here, when price approached it, you know, it rejected from here, here, here. So you guys get what I mean. So that's what I do usually. I usually like to go in on big time frames, daily or weekly. And then once I identify the support and resistance levels, I try to look, maybe it has a pattern. What do I mean a pattern? Maybe it has a descending channel like we can see. Maybe it's just in a downtrend. Maybe it has an inverse head and shoulders. Maybe it has a head and shoulders. And then that's how I predict, okay, is it gonna break out soon? Or you know what I mean? It depends. If it's a bearish scenario, or am I gonna do puts? I don't like short stocks. I don't do that. I don't short stocks. I used to do puts, which is options. Like today, I did make some money from. Hold on. Today I did make some money from
Carvana.
Carvana. Yeah, sorry, I'm a little bit lost. I got a look. I'm gonna give you an example. Oh, where's Carvana? Yeah. Like for example, on Carvana, I don't know. I think last month I didn't get it. I didn't get it, unfortunately. But I call it out right here. For example, this is the setup. You know, it's a bullish setup. So which is like, I don't know, symmetrical, triangle, whatever you want to call it. There's different names. So right here, I was looking for a breakout, and I think I posted on my X, oh, Carvana is getting ready to break out. So actually, let me bring the post over here so you can see what I mean. Give me a second, brother. I'm pulling it out. I don't buy by people saying, oh, it's gonna go to the moon. No, I don't do that. Or I don't sell, oh, it's gonna crash, you know. Always do your own research. Let's see. Okay, I think I found it. Okay. Right here. I'm gonna pull out this post. So we can see Carvana here. I had posted on my X. The money printer may be back. Another bullish setup is forming and looks ready for breakout. I put targets $474 with 85 resistance. Then all-time highs at 485 and 5 psychological level. And you guys can see here. See, this is a flag that I had. And look, well, we can see that. Oh, sorry about that. Then we can see that eventually it broke out. See, but it was it failed to break out from the high, and it made a double top. one top, two top, and then it broke down. So like that, you know. I do chart on Weibo, but I mainly focus on my ex, you know. But I don't know if you follow me on Weibo, but today I did posted about open. I posted a chart in how it was looking and everything. So yeah. All right, it looks like open is just waiting for the earnings call. It's not really moving a lot. It is hovering around $5.25 to $5.30 something cents. So yeah. I noticed you always glued to two stocks, Open and Carvana. Does it help you as a trader to know the stock properly and very well? Been reading your posts since, well, in my opinion, I've seen a lot of traders that are pretty new that they like to be like, oh, I'm doing this in Nvidia, or this in Palantir, or this in Netflix, this in Tesla, this in that. I believe you don't really need to do so many things in with so many tickers, you know. If that's the case, it's just investing, like buying the share. But if you're trying to do options here, options there, blah blah blah. I usually main like Open, which is my biggest investment as on shares. I don't do options on Open, but I do like to do options on Carvana. I do Tesla. I do Meta. I hate Amazon. I hate Google. I hate Apple. I hate Spy. I hate Spy. So, but that's just me. But I do main only like a few tickers, you know. And there's different people that trade. I'm more of a swing trader. When I do options, I usually buy for the same week. All the time, I buy weekly expiration. And I focus on making like breakouts, you know. I don't really focus on like, oh, I'm gonna trade this level, you know, like Spy, you know. I don't focus on like quick scalps. I like to do breakouts, flags. Oh, it has inverse head and shoulders. It have this symmetrical triangle. It has a cupping handle. When I believe it's going to break, then that's when I jump in, you know. So that's just the way that I like to do when I do options. Buying shares, if I have a long term vision, I don't care. I'll buy whenever, you know. Like open, my initial entry was around $2. I bought at $3. I bought at $5. Every dollar I've been buying, even on the way up and on the way down. I'm slightly down, but nothing crazy, you know. And that's because I average up. Muri open. What's up, brother? You guys are welcome to request to speak on the space if you guys would like to. Yep. All right. Let's see. Almost. All right. They're already live on YouTube, but nothing's showing yet. Let me check the website because Cass said to join a little bit earlier. Let me see.
It's just music they're playing.
Yeah,
Yeah.
but on the website as well.
No, it's I think he meant the YouTube.
From the website, right? Click on the
Yeah.
web. Oh, okay, okay.
So on the website, if you go,
Yeah, on the bar, on the like the middle right. Yeah, I know
yeah,
where. Yeah, that's what I clicked.
this is the music they're playing now.
Yeah. I might just pull out the big screen, you know, the YouTube. Might as well. It's the same thing.
But
All right, let's wait a little bit. All right, so far so good, guys. We are up 13%. I'll make a little post. MBO crypto. So it's kind of good to be concentrated to few stocks, like two, three, four. Um, well, it just depends on your style of trading. But I do believe keep it small. Even if, especially if you're like a newer trader. Investor doesn't really matter. But if you're like a new like trader, like doing options, or trying to make a quick buck, buck, then yeah, try to just focus on like two, three. Try to learn the movements, and then yeah. All right, 4 more minutes for the earnings call, guys. Let's see open get another pump. Let's get $6, baby.
You said they're dropping a music album too.
Excuse me? They're what?
The music album.
Already?
Yeah. I think though what I can hear like open door words in the song they're playing.
Oh, really?
Yeah.
I'm gonna see if I listen to it. Hold on, give me a second. Let me put it on my stream. Let's see. Ooh, no more waiting, no more games. Let's go, baby. No more waiting to buy a home. Buy it through open door, baby. I think that's probably what he meant. Like something fun, which is the music. Don't you think so, Reopen Army?
I think so.
Yeah. They better be blasting this at the 82 party in Las Vegas.
Maybe that's the song they want to play then.
You gonna go?
Of course.
Pick me up. Let's go.
Yeah.
That'd be funny. Imagine we meet and going to the party. That'd be pretty cool.
I know.
That's pretty funny that they have music about open door.
Yeah.
That's funny.
He's making earning calls fun.
Yeah.
It's not like
Yeah, not boring, Like I remember I once tuned into like I think GameStop earnings call back then, like 3 years ago. That shit was so boring, bro. The audio
Yeah.
was like from freaking 1940s, bro, from World War II or some shit like that. God, that shit was terrible.
That's interesting. The song is amazing.
Yeah, that's funny. OPET, the ETF of Open, it is up 25% of or better $2. Ooh. Let's see if Open can do that, baby.
Well, you said 40.
Yeah.
You said 40%.
Yeah, let's see. $6, baby. Let's go.
$6 is a lot.
Hmm.
Somebody's saying in the chat that it's gonna be red tomorrow.
Yeah, exactly. That's what I'm looking at. Whatever. Good for them. It's crazy how the open chat just blew up today. It's been so quiet for
I
the past
know.
few days.
Yeah.
I've been like the only one hyping it like nonstop.
Yeah.
Not hyping it before I get flamed.
No, I
Talking,
know.
chatting, okay, guys? All right, it's almost the earnings call. All right, it's about to start in a second, guys. Let's go. So I'm gonna do the following, guys. I'm gonna minimize the window. I'm gonna minimize it. I'm gonna minimize it like this, and we're gonna have open on the background to see how it reacts to cast. Okay, guys.
Yeah, that's actually good.
So we're gonna have it like this. I'm gonna switch to the 15-minute candle so we have more space on the screen.
Or you can have like two.
Like this.
Do you have a Mac or Windows?
Windows.
So if you use the Windows key
Uh-huh.
and arrow left, arrow right, you're gonna have one on the left, one on the right.
Uh-huh. I might just leave it like this.
Okay, I'm okay.
I'm gonna leave it like this. Let's see.
There you go.
Oh, you're ahead of me. No, that's not fair. Oh, there you go. All right.
I'll mute myself.
Yeah. I'm gonna have the audio for that one.
Okay.
Five, 4, 3, 2. I'm so excited. 1. Let's go. Mute myself.
You moved in. You nested. You partied. You cuddled.
I heard you stealing my rice. You know how much rice you have?
You ate egg rolls.
Really?
You slept in. Or tried to.
Mom, get out of my room!
You learned how to drive.
Hey man, slow down. Are you cheating?
And you kept growing.
Look at that.
Now it's time for the next chapter. With Open Door, get an all-cash offer for your home in 24 hours. Because saying goodbye should be the hardest part.
Welcome home.
Move into your future with Open Door.
I know. I need to see my room.
That was a
That's
badass
what
intro.
we're building Open Door for. It's why the
Jeez.
results we're sharing today matter. Because every number behind them represents a homeowner who got to focus on what comes next instead of what comes with selling. I'm Michael Judd, Open Door's head of investor relations.
I don't see the
Welcome to
chart
Open
on
Door's
your
first quarter
screen anymore.
2025
No, I know.
earnings call.
I just open it completely.
Details of our
Right.
results and additional management commentary are available in our earnings release, which can be found at investor.opendoor.com. The following discussion contains forward-looking statements within the meaning of the federal securities laws. All statements other than statements of historical fact are statements that could be deemed forward-looking, including, but not limited to, statements regarding Open Door's financial condition, anticipated financial performance, business strategy and plans, market opportunity and expansion, and management objectives for future operations. These statements are neither promises nor guarantees, and undue reliance should not be placed on them. Such forward-looking statements involve risk and uncertainties that may cause actual results to differ materially from those discussed here. Additional information that could cause actual results to differ from forward-looking statements can be found in the Risk Factors section of Open Door's most recent annual report on Form 10-K for the year ended December 31st, 2025, and other filings with the SEC. Any forward-looking statements made on this webcast
We're up 16%, $5.40, guys.
Yeah,
and assumptions.
16% already.
Yeah.
And Open Door assumes no obligation to update or revise them, whether as a result of new information, future events, or otherwise, except as required by law.
2,400.
The following discussion
It's a
contains
little more than
references to certain
2,400
non-GAAP
people are
financial measures.
watching
The company
Yeah.
believes these non-GAAP financial measures are useful to investors.
Yeah, almost
the
Yeah.
the call, not
Yeah, yeah.
not our.
Yeah. Oh,
Yeah.
no, I know.
Non-GAAP financial measures to the most
Now you got
comparable
my
GAAP metric.
my
Please see our
hopes
website
high.
at
Oh,
investor.opendoor.com.
it's okay.
With that, let's get into the open house with Kaz and Christy.
All right, oh,
Good afternoon, everyone. Early in my career, I used to write a plan that told my team what we were going to get done during any given cycle. Then, at the end of the cycle, I would go through the doc and color every sentence of the plan, green, yellow, or red, based on whether we had done what we said we would do and if we were on track to go where we wanted to go. I've kind of always found it useful to write things down so you can hold yourself to account. With that in mind, I'd like to remind you of the last financial open house. In my first open house, I told you that we had a 4-step plan to turn Opendoor around with renewed energy. Let's go back in time and listen to what I said. So here's our 4-step plan to channel that energy. First, by the end of next year, we will drive Opendoor to break even. We think about this in terms of adjusted net income on a 12-month go-forward basis. That means Opendoor will start generating cash and will never be forced to raise equity ever again. Second, we will drive significant positive unit economics while increasing the velocity at which we transact in homes. This includes launching financial services like mortgage. Third, as we increase our unit economics, we will change the company's focus from primarily building channels to transacting directly with buyers and sellers. We're also going to focus on reducing our days in possession rather than arbitrarily increasing spread, which has had genuine significant negative consequences for us. Fourth, once we've accomplished the first 3 steps, we're going to focus on allowing buyers and sellers to transact on Opendoor without having to buy or sell from Opendoor. This is going to significantly lower our capital risk, but more importantly, it's going to give folks options they want. Today, I want to grade Opendoor against these 4 steps, and then I'll give you some details. Here's the bottom line. We did what we said we would do, but let's go through this line by line. So, we're on track for our first step. We're driving Opendoor to be adjusted net income positive by the end of 2026 on a 12-month go-forward basis.
Let's go. That's good.
The goal is simple. Start by generating cash and never be forced to raise equity ever again. Second, since September, we've increased our acquisition velocity by 300%. We bought 537 homes last week alone. In the last week of the third quarter, we did only 128. And we grew while we drove significant positive unit economics. This improvement is a result of deliberate change to our product, our pricing strategy, and our operations. Most importantly, our October 2025 cohort, which is the first full cohort under Opendoor 2.0, and is the first one with enough sell-through data, is performing really well. I'll get back to this in a second. Third line, we grew our D2C acquisition contracts while reducing our average days in possession. Comparing last week to the last week of the third quarter, we've grown our D2C acquisitions by almost 700% and reduced our days in possession by almost 25%.
Very good.
Fourth, we've made it easier for sellers to choose the path that works best for them. And increasingly, they're choosing our capital-light product, Cash Plus. In the last week of Q3, Cash Plus was about 19% of our total contracts. Last week, it was 35% of a much higher volume. To give you a sense, Cash Plus was over 600% bigger last week than it was in the last week of Q3. This is the first step towards our goal of allowing buyers and sellers to eventually transact directly with each other. Christy is going to go through all the details of all the financials, but before she does, I want to say this. We laid out a plan for you. We're going to turn this company around, and we laid that plan out during Opendoor 2.0's first open house. That plan is working. We're green all across. We're already delivering results and are on track to deliver against our mission. In a minute, I'm going to tell you a lot about our product changes and all the things we've done since Q3. I'm really proud of how fast our team is moving and how much we're shipping. And the list I'll tell you about is a public CEO's dream. It sounds good in a script and it looks amazing.
Usually you guys know we're watching and listening to the earnings call. I don't know if you guys can see here on the space, but I am live on YouTube where we're watching it and you guys can hear it.
Words like strategic optimization.
I can't hear it through X.
Mm-hmm.
Or if you want, I can unmute myself and play it.
Oh yeah, it's up to you. Yeah, if you want.
Folks can look
Or
at this.
I think everyone can listen.
One of my favorite investors, Sir John Templeton, used to say,
Or actually, let's just do it with the YouTube because I have more people on YouTube than on X.
Yeah.
Yeah. Let's just do it like that.
Stay here, but
Yeah.
sit here
just
and
watch it
give
here.
random school words and ask you to believe that this time it's different. This time, I'm going to show you. Our October acquisition cohort, which is the first cohort of OpenDoor 2.0 that has had reasonable sell-through data, is on track to be the most profitable October cohort in company history.
Woo!
Again,
Let's go.
when it comes to the key metric that matters, our contribution margin, October 2025 is on track to be the most profitable October since OpenDoor was incorporated. And we achieved this in the middle of the most aggressive market expansion in OpenDoor's history. Given that this isn't really the strongest housing market, this performance, I think, shows a structural shift in how we operate.
Yeah.
A shift that I genuinely think will be durable across macro cycles. We are no longer a prop desk. We're now a market maker. And I want to put a finer point on this cohort. What makes this cohort significant isn't just the margin level. It's the shape of the cohort. From 10% to 50% sold through, our margin degradation relative to home price appreciation has been the lowest of any cohort in our history. Not any October cohort, any cohort, period. That the October cohort is going so well is not a plan, it's a proof point. The product launches I'm going to talk to you about aren't promises of things that might work.
Ooh, let's see.
They're the explanation for why October happened and why it's repeatable. Now look, because we're committed to transparency, let me get ahead of a couple of things. October was not our largest cohort by volume, but it was about double the size of what we were doing just a few months ago. We're not getting lucky on a few homes in a friendly market. And given how the past few weeks have gone, I believe we're on track to significantly increase our acquisition size as we said we would do. What October shows is that the structural changes we made under OpenDoor 2.0 are working. And then we're compounding those learnings into every single cohort going forward. We have a lot left to prove. I know that, but for the first time, we're not asking you to take our word for it. This is a new company. Look, the way I think about my job is that my job is to build OpenDoor as though it's product. Just like Tesla builds robots that build cars, my job is to build the tools and the systems inside OpenDoor that help us build a great product. In the last few months, we've made a great deal of progress on this front. I don't want to spend a lot of time talking about this, but I kind of want to take a second to talk about the most important part of it. As Vinod Khosla says, the team you build is the company you build, not the plan you make. Today, 18 people report to me at OpenDoor. Of those 18, 10 didn't even work at OpenDoor a year ago. Our 10K filing has a list of our executive team, and you can take a look at it. Not a single one of those people on that list was in our last filing. Since I joined OpenDoor, we have a new chief operating officer, a new CFO, a new president, a new chief growth officer, a new chief people officer, and a new chief business officer.
A lot of talent.
This
That's
is
right.
a world-class leadership team that I would put up against any other tech company.
Yes, sir.
And on top of this, OpenDoor 2.0 is the single most AI-pilled company in the public market that I know of. Let me give you an example. Not that long ago, after we bought a home, someone on our team would sit at their desk and manually pull up data from 5 different systems. Things like property records and
Sup, Malk? Are you sad that you joined the space? We're actually listening to the earnings call on the live stream on YouTube. So that's why you're not gonna hear no audio. So the link is in the comment of this space where I'm streaming live on YouTube.
every single time. Last week, someone at Open Door shipped an AI workflow that does all of this kind of automatically with no humans in the loop. It queries our data warehouse, cross-references inspection history, a plain English disclosure summary, fills a compliance PDF, and then sends it out for review.
That's pretty good.
Here's the best part. Other companies talk about how AI native their engineers are. The person I just talked about, that person is not an engineer. He works on our ops team. He built this in his spare time in a week.
Nice.
No ticket field, no sprint planned. No one asked him to do this. He understood this simple fact. It's wartime. And our primary weapon is our ability to prompt machines to create a new world.
Yes, sir.
And he's not the only person doing this. Our ops team, sales team, compliance teams, they're all building their own tools now. Now, if this is what our ops team does, I want you to imagine what our engineers are up to. So when I say we default to AI, I don't mean engineers use Copilot. That's not what I mean. Open Door is a different type of company. It's a company where everyone is learning how to think like an engineer. Okay, with that, let's talk about what we built. We shipped a lot in Q4. I'll try to move through this fast, but I want you to see how what we shipped caused the October results. Okay, we shipped across 3 fronts: better products, bigger markets, and stronger margins. And we did this, well, faster. First, we made our products better for buyers and sellers. For years, Open Door's product was a one-size-fits-all product. You want to sell a home? Here's an offer. Take it or leave it. But look, all sellers are not the same. Someone with 80% equity in their home doesn't have the same needs as someone with 20%. But under the old model, both of these folks paid the same fee, which means that we were taking on risk that neither side wanted. The seller didn't need it, and we didn't want it, but the product forced it. That's not a pricing problem. It's not an underwriting problem. It's a product problem. So we fixed it. We now put the ability to change the offer that fits your needs into your hands. You choose how much cash you want upfront, and the fee adjusts. Take less upfront, pay less in fees, often a lot less. Every dollar that a seller does not need upfront is a dollar that we don't need to put at risk, and a dollar that they don't need to pay for. So they pay less, and we make more. It's a win-win, and it also allows us to serve customers that we could have never served before. This risk reduction, it allows us to do something else too. It allows us to tighten spreads on our core cash product. It's early, but from best I can tell, this is working. We're seeing demand that we would have never seen before. And because we're seeing a lot of extra demand, we also launched our self-assessment app. With our self-assessment app, the seller takes pictures of their home and AI does the assessment work. No humans needed. And because there are no humans in the loop, in January, we nearly doubled the number of homes that we assessed compared to September. And so far this month, about half the homes we've assessed have needed 0 people to show up at your doorstep.
That is so good. That is
On top of
amazing.
this, we expanded our buyer products, Open Door Checkout. As of this morning, it is now live in 40 states. Open Door Checkout embeds mortgage pre-approval directly. It also supports Open Door's Heroes Home Credit, where we give the brave men and women of America's Armed Forces $4,000 towards closing costs of a home. Open Door Checkout also includes the Open Door Guarantee. It allows for free cancellation, warranty, and early move-in. We also launched our seller guarantee. When a seller sells us a house using Cash Plus, they now get a chance to make sure they like how we are selling the home. If they don't, they can just undo the transaction and take the home back by paying us a low restocking fee. Okay, that was the core product. Outside the core product, we also expanded our growth levers. To start, we dramatically expanded how many people we could serve by expanding our geo coverage and our buy box. It took Opendoor from 2015 to 2025 to become available as an option for about 1/3 of the homes in the US. 10 years. Opendoor 2.0 almost tripled that in about 10 weeks.
Yeah,
Thanks to
that was
AI,
huge.
our product went from being available to about 1 to every 3 homeowners to being available to nearly every homeowner in the lower 48. Now, you would expect that that kind of rapid expansion would introduce risk, sloppy underwriting, margin compression, operational blowups. We saw the opposite. You'll hear Christy talk about our margin guideposts in a bit, but the new system is working, and it's already generating thousands of incremental qualified leads per week with zero incremental marketing spend. Making this work well required us to build across almost 200 MLS data sets, coordinate over 100 brokerage regions, and expose 150 standardized listing attributes. This was hard work, but we believe software should not be limited by zip codes. And as we expand our product, we also significantly improved our data ingestion. We now have a nearly real-time data ingestion with over 1,000 pipelines. They serve our new market-agnostic pricing tools, and we also have a new ML model that predicts customer conversion propensity at the time of underwriting. It uses like a dozen different data points so we can best target our sales and marketing efforts. And because we have all these new potential customers, we also focused on making sure we can grow profitably. I want to tell you something a little counterintuitive. Usually CEOs get in front of investors and say, we're focused on cutting costs. And usually that doesn't work, and actually it increases costs. So we didn't do that. We didn't focus on cutting costs to improve margins. We focused on improving the product and taking pride in our code. And the costs started disappearing, kind of on their own. Look, products frequently get better by removing things, not adding them, by deleting code, not writing it. So we deleted a lot of things. They just weren't needed. Last quarter, I talked to you about the actual debt that was weighing down the company. We're now focused on a different kind of debt, but one that is just genuinely equally pernicious. There's a concept in engineering called tech debt. It's the accumulated cost of every shortcut, every extra layer, every microservice that was added for no goddamn reason. This tech debt across the entire stack is the reason that it's 2026 and connecting an office printer still feels a little like diffusing a bomb. And honestly, before the recent changes, Opendoor wasn't that much better than your printer. We weren't just carrying tech debt. We were also carrying organizational debt. And the interest payments on these bad decisions were just killing us. So we started paying this down, and the results are just wonderful. When Opendoor entered 2025, our annual run rate costs on hosting was $12 million a year. Exiting 2025, Opendoor 2.0's cost on hosting infrastructure is less than $5 million a year. We haven't just significantly cut the cost of providing our products to our customers,
70%.
we also made the product better. We also significantly increased the sample set used in our valuation model while decreasing our cost. This means that the runtime in our model was reduced by about 50%, from 12 hours to 5.5 hours. The entire pipeline can now run in a script that's about 50 lines of code, and the feature
Oh.
this saves us at least $1 million a year. We also replaced third-party tools with in-house vision models for thinking through home conditions. Not only did this save us a few $1 million in backfill costs for large-scale experiments, it also brought a core AI capability fully in-house and cut the processing time for 100,000 listings from 34 hours to just 4. Cheaper, better, faster. On top of this, we also cut over $1 million in cost by replacing SaaS tools with more cost-effective and genuinely better AI alternative. And we stopped paying for tools we barely used. Land and expand SaaS no longer works inside Opendoor. And we didn't just cut costs and focus on better infrastructure. We also invested in advanced ML models and data-driven pricing strategies. They're improving our margins per home while maintaining or actually improving our conversion rate. Our home sale pricing is now powered by our new ML model that avoids Opendoor's previous policy of just blanketed price drops. The model now helps us make targeted pricing decisions for every single home. We also built a new home-level days in possession model using real demand signals. I think this is going to increase our dispersion by about 2x. Okay, that's a lot. Let's take a step back. Look,
Yeah, he talks a lot.
I opened this call
I would have
by
memorized
grading
all of that.
Opendoor against the plan that we laid out last quarter. Green, yellow, red. We're not cowering. We're going to keep doing this every single quarter. You can track our acquisition contracts and our progress in real time at accountable.opendoor.com. We're going to revisit this every single quarter, just like we did right now. And we're going to make it reflect our path to profitability. As we learn more, we'll tell you more. You can see the results of our work, what we shipped, and whether it moved the needle. Please hold us to it. We're asking you to hold us accountable because this matters. There are millions of families in this country where the experience of buying or selling a home is so bad, so slow, so uncertain that people who want to do it just don't. This is a hard problem, but we're going to fix it. And for the first time, we have the team, technology, and the proof points to actually do it. If you have questions about anything, DM me on X. Seriously, DM me on X. I'll try to answer your questions. We're not hiding behind consultants or scripted callbacks. That's not how we operate. Christy's going to walk you through numbers, but to steal a bit of her thunder, the numbers are good. Christy?
Thank you, Kaz. Bottom line, we're executing. Last quarter, we laid out 3 goals: scale acquisitions, improve unit economics and resale velocity, and build operating leverage, and we delivered on all 3. We increased acquisitions 46% from the third quarter. Our October 2025 acquisition contract cohort is over 50% sold through or in resale contract. This represents over a 2x improvement in resale velocity compared to October 2024, and a roughly 50% improvement from October 2023. At 50% sold through, this cohort is yielding the highest contribution margins for an October acquisition cohort in company history. And we delivered all of this while reducing fixed operating expenses and holding trailing 12-month variable operations expense flat as a percentage of revenue. Our fourth quarter results reflect the early days of Opendoor 2.0. While we implemented the operational changes Kaz described, it's important to note that 94% of the homes we sold in Q4 were acquired before October. We were clearing the old book while building the new one with higher quality homes. In the fourth quarter, we purchased 1,706 homes, an increase of 46% from Q3. This marked an important inflection point as we shifted from the high spread posture of the first 3 quarters to a more tailored approach. We provided stronger offers for higher quality homes with greater expected resale velocity and maintained higher spreads for lower quality homes with elevated risk and slower resale clearance expectations. We delivered revenue of $736 million,
I'll be back, guys. I'm
representing
back.
a 20% quarter-over-quarter decline, meaningfully better than our guidepost of a 35% quarter-over-quarter decline. We sold through more aged inventory than initially forecasted, a direct result of the resale velocity improvements we've made. As anticipated, our margins faced near-term pressure as we worked through legacy inventory. GAAP gross profit was $57 million in Q4 compared to $66 million in Q3. GAAP gross margin was 7.7%, up 50 basis points sequentially. Contribution profit was $7 million, and contribution margin was 1% compared to contribution profit of $20 million and contribution margin of 2.2% in Q3. This sequential decline reflects the continued clearing of older, lower-quality inventory acquired during the prior high-sped strategy and Q3's historically low acquisition volumes, leaving us with minimal new inventory to improve the mix. Adjusted EBITDA loss was $43 million compared to $33 million in Q3 and exceeded the favorable end of our guidance range of a high 40s to mid $50 million loss. Net loss for the fourth quarter was $1.1 billion compared to $90 million in Q3. This included a $933 million non-cash loss from last quarter's convertible note refinancing. Adjusted net loss, which excludes that item, totaled $62 million compared to $61 million in Q3. Turning to our balance sheet and capital structure, we ended the quarter with $962 million in unrestricted cash and $133 million of equity invested in homes. We held 2,867 homes at quarter end, representing $925 million in net inventory. Our non-recourse asset-backed borrowing capacity remains robust at $7.2 billion, with total committed borrowing capacity of $1.6 billion. These facilities, built over years of partnership with our lenders, provided us the flexibility to scale as we execute our growth plan. Last earnings call, we announced the refinancing of the majority of our convertible notes with equity, eliminating a near-term repayment trigger. We reduced our cash interest burden, and we issued the warrants dividend to align our shareholders directly with the upside we're working to create. The foundation is set for Opendoor 2.0 operating model, and now we're focused on delivery. As we introduced last quarter, we are executing against 3 management objectives we believe are key to reaching profitability. The table in our earnings release shows our progress against each objective. Let me walk you through the highlights. First, scale acquisitions. We increased homes purchased by 46% quarter over quarter, from 1,169 homes in Q3 to 1,706 homes in Q4. Last week, we signed 537 acquisition contracts, up from 236 contracts at the time of our last earnings call. You can continue to track our weekly progress on our dashboard at accountable.opendoor.com. Second, improve unit economics and resale velocity. We made significant progress on resale velocity this quarter.
That's pretty good.
The percentage of Opendoor homes on the market for greater than 120 days decreased from 51% at the end of Q3 to 33% at the
That's
end
amazing.
of Q4. An
Faster we
18
sell, baby,
percentage point
faster.
improvement in a single quarter. This reflects the operational changes we've made to move homes faster. Better pricing, more robust monitoring system, and an improved buyer experience through products like Opendoor Checkout. In addition, the margin performance and resale velocity of the October acquisition cohort demonstrates the improvements we've made in pricing and selection. I also want to be clear about what this means for our go-forward strategy. October's margins thus far have come in above our long-term target range. That's a good problem to have, but you should not expect every quarter to look like October on a margin basis. You should expect us to reinvest that spread advantage into growth, faster turns, broader coverage, and more competitive offers, while we aim to maintain contribution margins within our target range. You can track our product, feature, and partnership launches on accountable.opendoor.com to see how we're continuing to build velocity into the business. Third, build operating leverage. On our last earnings call, we committed to holding fixed operating expenses flat and trailing 12-month operations expense, the variable component of our operating expenses, flat or down as a percentage of revenue. We achieved both goals. Fixed operating expenses were $35 million in Q4 2025 compared to $37 million in Q3 2025 and $43 million in Q4 2024, down $2 million quarter over quarter and $8 million year over year. Our trailing 12-month operations expense as a percentage of trailing 12-month revenue held steady at 1.3% in Q4. As we scale acquisitions from this lower cost base, we expect meaningful operating leverage to emerge in 2026. These three objectives remain the foundation of our path to profitability, and we're executing against them with discipline, transparency. As I said last quarter, you can't build a great business in a spreadsheet. You build it by shipping product, operating with discipline, and learning from the market. Now let me give you some guideposts for Q1 and the year ahead. Acquisitions. Our profitability framework remains unchanged. We're targeting approximately 6,000 quarterly home acquisitions as we exit Q4 2026. As we've learned more in production, we're refining our acquisition trajectory to be more weighted to the back half of the year. We're investing Q1 and Q2 in improving how the funnel operates to scale more efficiently. This means refining conversion, sharpening pricing, and developing adjacent services to bolster unit economics. You'll also notice we've updated how we present accountable.opendoor.com. We replaced the cumulative projections chart with a single view that shows weekly actuals, a fitted trend line with its slope, and a projected range for where we plan to be. Cumulative charts can mask what actually matters, whether we're accelerating and whether we're progressing towards our year-end targets. This view shows you both. We'll update the projected range each quarter as we learn.
What's up, JMill and Dollar Bill? I'm actually live on YouTube where we're watching and listening to the earnings call. Since I can't, you guys can't hear the audio from it here, and neither can I screen share it or anything like that. So yeah, there's probably not audio here, but we're watching it on my YouTube live on the link on the comments.
Contribution margin. The mix of old inventory versus fresh inventory drives margins, and Q1 2026 will reflect this shift. We made a concerted push in Q4 to clear legacy inventory. The homes we're selling in Q1 2026 are more representative of our new model, higher quality and faster turns. Our contribution margin bottomed out in September and has been improving every month since. We expect to exit Q1 with the highest contribution margin we've posted since Q2 2024. Finally, on adjusted EBITDA, we expect Q1 2026 adjusted EBITDA loss in the low to mid 30 millions. This represents continued sequential improvement as we maintain cost discipline while simultaneously investing in automation and product velocity. Last quarter, we showed you the blueprint. This quarter, the house is going up. Our goal remains adjusted net income profitability by the end of this year on a 12-month go-forward basis. We have a lot of work ahead of us, but the proof points are building, and we intend to keep earning your confidence every quarter. With that, Michael, I'll turn it over to you for questions.
Great. Thanks, Christy. Okay, we've had a handful of questions that center around a common theme. We grabbed two of them. First, Zach H. asks, where is Opendoor at currently compared to expectations and profitability, and where would you like to be? And Ryan Tomasello from KBW asks, according to your accountability dashboard, acquisition contract volumes are running at or below the low end of your targets. Aside from seasonal factors, what are the primary macro or pricing drivers preventing a faster ramp?
Yeah, thanks for the questions. Look, to be blunt, we're right where we need to be. We're on track. If you had told me 3 months ago that we'd be here, I would have told you you're being a little too optimistic. Last quarter, we laid out a 4-step plan, and I think we're agreeing across all 4 steps. We did what we said we would do, and it's working. Our contribution margin bottomed out in September. It has improved every single month after that. We're going to exit Q1 with the highest contribution margin we've had since Q2 2024. Look, it's early, but things are going well. And to be clear about it, this isn't the macro helping us. This is us helping ourselves. So, to answer your question, the reason we said our goal was adjusted net income profitability at the end of this year on a 12-month go-forward basis is because that is what needed to make sure Opendoor starts generating cash and doesn't need to raise equity ever again. That's our goal. But just like Google Maps finds you different routes to get home, we're finding the best route to get home. And actually, let's take a step back before that. Before we become ANI profitable, we're going to become adjusted EBITDA profitable. Now, I think adjusted EBITDA is not the best metric for measuring our business, and I'm not about to give you guidance. I think our lawyers have very particular feelings about me saying guidance. But to be transparent about it, the plan I have on this laptop right now has us being adjusted EBITDA profitable on the annual basis starting in Q2.
Ooh,
So things are going well. Things
that is
change,
good.
and company building is a little messy, but things are going
That was
really
good.
well. Now, I think there's a question behind a question. There's like an actual hard question here, which is, why are you at the bottom end of your acquisition goals? Let me say two things. First, I reserve the right to wake up smarter every single morning than I was yesterday. I want to learn. And I've learned a lot in the last 3 months. I've learned that the levers we have at our disposal are genuinely working faster than I expected. And we've discovered we've had levers that I didn't think we would have. So if we wanted to hit the top end of the range, we could do it very easily. But that would come at a cost. And I want to tell you about the cost. Okay, so in a product company, you always basically have two choices. You can invest in product or you can invest in growth. That's the back and forth, right? Engineers are your most precious resource, and they can usually work on one of two things. And like, here's what I mean by this. Like, when you invest in product, you're putting fuel in the tank. When you invest in growth, you're spending that fuel. And this is actually like a key difference between product companies and not. Right now, I want to invest in having the best product we can before we go and invest in growth again. So I'm choosing to work on the funnel rather than the number that just happens to come out at the end of the funnel. Let me give you an example. This actually matters. So early in January, we took 4 engineers aside, and we asked them to work on our mortgage product. Those engineers could have worked on the Opendoor app. And I think the Opendoor app is genuinely bad. And fixing it would be good, and it would lead to growth. But we bought 500 homes last week, and growth is going well, and we have lots of levers. So we chose to work on our mortgage product and our infrastructure over the Opendoor app. And because of that, we're going to launch our mortgage product in beta this week. Okay, let me be blunter. We built a mortgage product in less than 10 weeks. People told me it would take at least a year. We did it in 10 weeks. This is genuinely better for the long-term growth of the company than hitting the top end of the old accountable range. What matters to us is profitability. And in order to get there, the thing that matters is the pace by which we exit this year. What Christy just said, 6,000 last quarter. I am very confident in the levers we have and the levers we have built, and we can hit that pace. I'm very confident more than I was 3 months ago. That's why I'm so comfortable that we can take a moment to spend time investing in product, to put fuel in the tank so we can burn it later. I promise I will never, ever sell the future growth of our company at a discount. We're going to do the right thing and focus on the things that matter. Look, our October results proved something. They proved that what we are doing is working. The bets and the actions we've taken are the proof points we need to know we can get to profitability. So we're going to invest in product and then growth.
Great. Our next question comes to us via video submission from Anthony Pompliano.
Hey, Kaz. Hope you and the Opendoor team.
Oh, Anthony.
My question today is about artificial intelligence. Obviously, this has become really pronounced in the market, but what are you guys using it for internally, and how should that change the customer experience in the Opendoor product moving forward?
Thanks, man. I think the best example I can give you for AI use is what's happening at Opendoor in underwriting. Give me some rope. I love football. I think it's a great sport. but I hate the fact that in any given football game, there's about 11 minutes of football and 3 hours of not football dressed up as football. And when I got here, Opendoor's workday was kind of the same. Like a lot of not work dressed up as work, a lot of toil that humans should not do anymore. Now look, every company says AI. It's like the buzzword of the day. And honestly, a lot of it sounds to me like BS. Look, real estate is basically the last industry that is untouched by technology, where we pretend humans have a better sense of what an asset is worth than a model that's been trained on decades of data. And for a long time at Opendoor, we pretended that was true too. But machines are better at some things than humans. Look, humans do taste. Machines do ETLing data, creating documents. Machines do math. Here's my principle. Humans do humans work, and machines do machines work, right? And like human work is the work that machines cannot competently do yet. So what can't they do yet, for example? The last mile of our work they can't do yet. So the house that backs onto a highway. The machines are bad at valuing that asset. That's where human judgment comes in. Our problem at Opendoor was never that we had humans in the process. The problem we had was that we had humans doing the wrong part of the process. So what have we changed, right? Our analysts are no longer doing valuations today. They're auditing what AI has prepared. They're working on evaluating the output rather than doing paperwork to prepare the input, right? To go back to football, oh, this is fun. AI kind of lets us run a no-huddle offense faster and more efficient, but the QB still calls the plays. So I think you asked, what should investors expect? Let me actually what customers should expect first, because that's actually more important. Customers should expect a fair and fast offer with fewer errors. Investors should expect declining operational expense as a portion of our revenue, like we talked about, and a company that doesn't move as slow as the San Francisco BART. So, oh, and there's also a separate thing. I think there's a key thing folks don't appreciate about AI. AI constitutionally destroys some businesses and improves others, right? If you're a point solution selling SaaS, I feel sorry for you. But if you deal with a real world where the primary problems are pricing and operational complexity and variance, AI is basically like manna from heaven. It's the thing we need to make the business work. I'm going to stop now.
Great. Our next question comes to us via video submission from Catherine M.
Hi, I'm Catherine Morgans from Portland, Oregon. I became a shareholder in Opendoor in 2021. I was inspired to invest in the company following my experience using Opendoor to sell my home. It was the most streamlined and painless home selling experience that I've ever had, and I cannot imagine, should I ever need to sell a home again in the future, using any other option. I've been following the progress of Opendoor mainly via the Datador Discord, and it's been very thrilling over the past 6 months to see all of the innovation, especially with the improved implementation of AI to enhance operations and sharpen modeling. So, you know, as far as I'm concerned, things are looking very good on the, let's call it the software front. My question has to do with, let's call it the human front or the customer front. And that is, how do we get to the point where sellers think, I'm going to try Opendoor first before even considering going via a realtor? How do we turn that corner where Opendoor becomes the default first option that people try when they're ready to sell their home?
Yeah, that's a great question. Defaults are like incredibly powerful. And usually folks talk about defaults the way they talk about brands. You use a Kleenex, I Venmo my friends, I put a Band-Aid on my kids' legs basically every night. I want you to open door your home. But brand is just another word for reputation, and reputations are earned backwards, not forwards, right? You can't spend your way into having a great brand. Otherwise, all of you would be watching me right now on Quibi. Look, selling your home is one of the most important financial decisions for average American families. Selling a home it's an act of trust, right? And historically, folks have placed that trust in people, not software. Opendoor exists to build software worthy of that trust. And to become trusted, you need to have lots of people use your product, lots of people be delighted by your product, right? So my favorite example of this is Jeff Bezos and Sam Walton, right? The best marketing is a product that delights you. Jeff Bezos didn't spend money on advertising. He spent money on making the product fair and fast. Same with Sam Walton. So for us, if we want to be the first place people go to, we need to kind of earn that same level of trust. And that for us starts with the offer. The offer is a product. It needs to be accurate, fair, reliable. It needs to feel great. And if I'm being honest, we're not the default yet, but we're on the right track. I know we're on the right track. Let me tell you why. In markets that we've been operating for a while, in our mature markets, 20% of folks who go on to list their home before they call a person, they try opendoor.com. That's the beginning of looking like a default, right? As we expand more markets, we'll get there. But so how do you become the default? That was your question, I think. I realize I've been talking for a really long time. So in order to become a default, you have to do a few things. First, you have to be available. At the end of last quarter, Opendoor wasn't available everywhere. So we expanded all over the lower 48. We're available to almost everyone right now. Second, you have to remove every point of friction, right? Opendoor needs to make a fair offer, a good offer, a real offer fast. Trying Opendoor needs to be a delightful experience for our sellers. And last, you need to consistently deliver value. You need to be a fast transaction, better pricing, great services, including an amazing mortgage product. And our new unit economics help us do that, right? Better unit economics means better offers build trust. Defaults follow trust, and trust follows great products.
Great. Our next question comes to us from Tian He. With the stock down significantly since your tenure began, how should investors assess progress? What key metrics best reflect operational improvement? What is the strategy to restore market confidence?
I mean, look, let me just answer your question a bit personally first. I am very highly motivated to see Opendoor's stock price go up, right?
Ooh.
My family is the most levered family in the world on Opendoor stock.
Nice.
My salary is $1, and unless stock levels see levels they haven't seen in years, I don't get paid. So
let's go.
I don't want you to take what I'm about to say the wrong way, but I just want you to let me say this.
Okay, let's see what he says.
I don't manage the stock price. I manage the business and
Well,
look
duh.
at what we're building. Now, my responsibility is to create shareholder value. That's literally my job, to create value for our shareholders, whom I deeply appreciate. But I fulfill that. I fulfill my responsibility by not looking at the stock price every day. I fulfill it by building something people want and value. The stock price will follow. It literally always does. My favorite book, one of my favorite books, is a book called The Score Takes Care of Itself. I have it on my desk. It's in our library at Opendoor. It was written by Bill
Ooh,
Walsh.
I gotta buy the book.
Didn't win Super Bowls by telling his team to focus on the scoreboard. This is a football-themed earnings call. His whole philosophy was simple: like execute the right way, take care of everything. The score takes care of itself. And I'm pretty sure he won more than 82 games. The stock is not the company, right? Jeff Bezos didn't become a worse CEO when Amazon stock dropped 90%. I bet you he didn't even flinch. He kept building. And the stock eventually reflected the business, not the other way around.
What was that noise?
Now, I've been here for 4 months. In that time, we've demonstrated clear evidence that the model we are building is working and the business is structurally improving, right? But how should you judge our progress? I think that was the question. I don't think you should do it by where the stock is today, but you should think about whether the underlying business is getting structurally better. I've given you how I would grade us, but I genuinely, honestly think you should find a way to do that too. You should build your own model on us. But I want to be transparent about this. My job is to build a company that can host a product that people want. My job is to improve the economics of that business. And everyone here, everyone who works at Opendoor is focused on executing. The score will take care of itself.
Great, thank you. Next, Victoria B asks, if home prices drop another 5 to 10% nationally, what happens to your margins and inventory risk? How prepared is Opendoor for that scenario?
Thank you for the question, Victoria. It is the right question to ask. Opendoor 2.0 is built to move homes, not hold them. The longer you hold when the market turns, the more it hurts. So the whole game is turn faster. And here's what's genuinely different now. We have more tools than we've ever had. Previously, the primary lever was spread, priced conservatively enough to absorb a market move, and that works, but it's blunt, and it has terrible adverse selection. We now have a broader toolkit. First,
Reopen Army.
where we expect faster resale velocity, and we maintain wider spreads on homes with more risk or slower clearance expectations. Second, velocity. We reduced homes on market greater than 120 days from 51% to 33% in a single quarter. Our October cohort is clearing at 2x the velocity of October 2024. A home we own for 45 days has fundamentally different risk exposure than one we own for 180 days. And as we grow volume, the goal isn't to hold more homes, it's to move more homes. Scale and velocity compound together. Third, Cash Plus. This is an underappreciated as a risk management tool. When a seller opts in, they're retaining more of the price risk, and we earn fees with less capital at risk. That structurally shifts our exposure. Are we immune from a 5 to 10% decline? No, nobody is. But the question isn't whether it hurts, it's whether Opendoor is structurally positioned to navigate and withstand it. The October cohort is a great example of this. Over the past 5 months, national home prices came down roughly 300 basis points. During that exact period, our contribution margins on that cohort held steady or slightly improved. That's not hope or an expectation, that happened.
Great. Our next question comes to us from Andrew Boone from Citizens, who's wondering, there's some testing of a mortgage product with Lennar. Where is Opendoor in extending the services opportunity? What should our expectation for 2026 be for Opendoor to be able to attach more adjacent products to transactions?
I feel like I'm now on a football theme, so I need to find a football analogy. I just don't have one. Okay. Look, like I said, we started building our mortgage product in January, and we're going to launch it in beta this week. I showed it to Christy last night. I'm very, very bullish on this product. I think it's going to be good. It's going to take us a second to get all the right things, because that's how products work. But I'm very bullish, and we're going to have more news on this soon. I think there was a part of the question that was about unit economics. let me hand wave because I think the unit economics of the mortgage space are like relatively well understood. We're going to do some special things about them, but let us tell you about them when we do those things. So I think the primary unknown question is this. What will be our attach for mortgage and adjacent products, right? How many people who buy or sell a home from Opendoor take a mortgage from us? I have a hypothesis, but not a good answer. I've done this a couple of times, but we're going to under-promise and over-deliver here. But separately, I think there's a very likely that there's a world where we have partners, especially our home builder partners, that use some of the software we're building. We're building a new stack with the help of some partners, and it will be more finely tuned to people who own assets they're selling than a typical mortgage stack. I still don't have a football analogy.
We can come back. Our next question comes to us from Dae Lee from JP Morgan, who's asking,
JP
what
Morgan.
has stood out to you so far about the quality and profitability of the homes you're buying since ramping up acquisitions? Any surprises as you've picked up the pace, and have those led to any changes in your approach? And looking ahead, what are the key factors or milestones you're watching most closely to gauge progress toward your current profitability and margin targets?
Thank you for the question, Day. As you may have noticed, the October 2025 acquisition cohort is something we've been paying a lot of attention to. And that is because that's the first cohort where we had the offers, the contracts, the acquisitions, and now 50% of the resales are under the Opendoor 2.0 model. So it is a very important source of data for us. The performance of this cohort isn't just one thing, it's everything working together for the first time. So I talked earlier about selection and spread dispersion, but we are targeting higher quality, higher velocity homes so that we can turn them faster and get better selection. When you have better selection coming through the door, that really improves our operations. Those are homes that we can get relisted faster and have less variance in outcomes. And then it comes to the resale systems and our ethos. We as an organization fundamentally believe that it's better to identify a margin optimized clearing price than to wait around for the perfect offer to come along. And so our machine learning pricing model, it has meaningfully improved the precision of pricing decisions. Better demand signals, better timing, and better calibration at the individual home level rather than blanketed spread reduction or price reductions. The result, resale velocity in our October cohort was 2x what it was in October 2024, and with margins that exceeded our expectations. And so that puts to rest the idea that speed and margin are a trade-off. We've shown the answer to both can be yes in a market that, frankly, no one would characterize as particularly strong. To answer your question about surprises, I think what surprised us was how quickly some of the changes we put in place showed up in our results. For example, the degradation. And so when you have a cohort of homes that you buy, you expect the homes that you sell right up front to probably perform a little bit better than the homes later in the cohort. But in this last October cohort, we saw that from 10% to 50%, our margins basically held flat. They were actually up about 18 bips. And that was during a tough market. And so seeing that flat degradation was very promising. Finally, you asked about looking ahead, and I guess I would just bring us back to our management objectives. Scale acquisitions. We've said we want to exit the year with 6,000 acquisitions per quarter, and that will set us up well for our adjusted net income profitability. As a reminder, we're now available through the lower 48, and we'll start leaning into marketing in Q1 as we expand to reach those markets. Objective number 2 is improving margin and resale velocity so that we return to our 5 to 7% targeted CM. And objective 3, build operating leverage as we rescale. Fixed operating expenses flat or down, and trailing 12-month operation expense flat as a percentage of revenue or down.
Great. Our next question also comes to us from video submission and will be answered by Brad Bonney, Opendoor's Chief Business Officer.
Aloha ko Open Door. My name is Kupa'a Mekalana Kila. I'm here with my daughter, Eva, and we're in Ohana from Hawaii that relocated to Tennessee. We purchased with Open Door a few months ago because of the convenience. We tried the traditional way many times, and we stumbled upon Open Door. It allowed us just unlimited access to the property we're looking at, speed of response, and it's just the easiest way to work with. We didn't need any realtor. We didn't need our attorney to help us. It was just us and Open Door. And we're promoting Open Door a lot to our whole Ohana because this is new to us. This is a new way of buying and selling or relocating. And because of that, that's what got us to also invest into the company, because we saw something brand new, something convenient, and something totally different that goes against the traditional way of buying and selling. My question to Kaz is, as you know, I'm a veteran. A lot of military people have to move. We come on orders really quick. And I see this being a great platform for a lot of military people, veterans, active duty. What is Open Door doing to help our community? I really appreciate the time. Aloha, mahalo kia kua. Talk to you guys later. Aloha.
Whoa, what happened?
Hi, Kupa.
Oh.
Thank you for your question and thank you for your service. As a fellow veteran who spent more than 7 years in the Navy serving primarily on a nuclear submarine, I know what it means to raise your hand and say, I will go where you need me, when you need me, for as long as you need me. That commitment makes the American dream possible for all of us, and it shouldn't come at the cost of the dream itself. Nearly 400,000 service members PCS every year. That's almost 500,000 families navigating a home sale on a timeline they don't control. The traditional real estate process wasn't built for that reality. Open Door was. Fast offers, close dates you control, and certainty in an otherwise uncertain transition. Here's how we're helping. We've already launched the Heroes Home Credit. This is a $4,000 credit towards closing costs for active duty service members and veterans buying an Open Door home. That's not just some marketing gimmick. That's Open Door recognizing that military families already absorb significant out-of-pocket expenses every time they move. They shouldn't have to sacrifice when buying their next home too. We're building from there. We're working hard to make sure VA loans work seamlessly with Open Door because that's how many military families buy. These are some early steps, but we really need to continue to build trust with the military community. Trust doesn't happen with ads. It happens through word of mouth. One soldier tells another how easy it is to sell their home. One sailor tells her shipmate how they seamlessly moved their family across the country. And each time, it's Open Door who made it happen. That means the most important thing we can do is exactly what we've always said. Build a product that actually works for the people who need it most and deliver on every promise we make. Every military family we help becomes an advocate, and every advocate helps spread the word. Kupa, your question today is exactly what this looks like. Thank you, and thank you again for your service to our country.
Great, thanks, Brad. I think we have time for one more, and Zach H. is wondering, where do you expect to see Open Door in 2 years?
Ooh.
That's a great question.
Let's see.
It's actually my favorite question.
Let's hear that one.
Before I answer that question, I want to say something. One of the things that makes me deeply proud of working at Open Door is the number of veterans that work at Open Door. We deeply recognize that freedom isn't free. So thank you. Genuinely, thank you.
I'm getting the sun from the window, guys.
What do I expect? Well, 2 years from now, I expect to be sitting in front of you telling you that we delivered exactly what we said we would do. 2 years from now, I want Open Door to be the default that we talked about. I don't want to have to choose anymore between margin and volume. 2 years from now, we're going to get both. 2 years from now, the AI infrastructure we're building right now is going to have a compounding effect across our cohorts. We're no longer going to be talking about the model. We're going to be talking about scaling it and how we can serve as many people as we can. And we're going to be okay with the people who doubt us now taking credit for our work 2 years from now. But the most important question for me genuinely is where homeownership is going to be 2 years from now. Will a teacher living in Kansas City be able to afford a home on her salary so that her kids can grow up in a home owned by their mom and dad? Today, the answer to that question is no. 2 years from now, I hope can stand in front of you and say the answer to that question is yes, because then our work will have mattered. Okay, thank you, thank you. Thanks for putting up with us. We'll see you in 3 months. Cheers.
Well, it's done. I honestly thought he was gonna say, I don't know, something. I like what he said. It was good. But I thought he was, I don't know. I thought he was going to say like last time, oh, I honestly hate shorts, so we have surprise for you guys, blah, blah, blah. I thought maybe he was going to announce a partnership or something. Either way, I think it was great though. I like what he said. I like the album, the music album. That was funny. And well, we did see some progress. Earnings per share was 7 cents. The expectation was 10 cents or 11. Revenue, we beat revenue as well. Came at 736 million, and the expectation was just slightly below 600 million. So yeah, I feel like this is gonna be our market reversal that we deeply needed on open, and then keep pushing higher from here, you know, because this is proving shorts, haters, whatever, that this is actually a turnaround story that we can push higher from here, you know. Like he said, he expects us to be EBITDA profitable by the start of Q2, so that's good as well, you know. So yeah, let me know what you guys think. I'm about to end the stream and the space soon. That was a stream and a space for almost 3 hours. So yeah, I mean actually 2 hours. I believe tomorrow open can honestly push to $6. That's just my opinion. But either way, this breakout, it is looking really good. Like price out of this breakout, it's already around here, all the way up here. So that is amazing. The breakout out of this descending channel sits at around $6, $5.85, 80 around there. I feel like once we break finally this descending channel, then we can start making our way back up, you know, potentially all the way to $10 to 52-week high, and then start making our way to $25 for the weekly target, long term, you know. I do believe we push. Are you still in the space? Yeah. Are you still? Yeah. Hold on, give me a second, guys. Hold on, guys. I think this thing disconnect me from the space. So yeah, I mean it looks good, guys. Let's just see tomorrow how it goes. But anyways, guys, I appreciate you guys for watching this stream on YouTube. I'm gonna try to stream more often as well, and then I'll probably maybe stream on X one of these days. Hey, what's up, Open an Army? Can you hear me? Hello.
Okay, that was fun. We're gonna end the space.
Yes. All right. I'll see you later, guys. Bye bye. Have a good one.
Bye. Thank you. Thanks a lot.
Thanks for listening, man. Appreciate you guys. Bye bye.
Yeah. Bye bye.
All right. Woo. All right, guys. All right, guys. Thank you guys for watching the stream on YouTube as well. I appreciate you guys a lot. And I'll see you guys on the next video update or live stream.